Well, if you were wondering, hey, has Wall Street gotten enough favors from Congress? Rest assured, I'm here to tell you about the final favor they're going to get, okay? So right now we're in the middle of budget negotiations, and Wall Street has decided that they would like to put something in that final deal that has to be voted on. It has to pass, right? So it's a good opportunity to stick something in there and get what you want. Now, the thing that they're asking for has nothing to do with the budget negotiations, has nothing to do with what should normally be in these proceedings. But they don't care. They just find it to be a good opportunity to get more. So what is it that they want? They want to deregulate derivatives. Great. Okay, now, for those of you who don't know, wild, out-of-control gambling on derivatives is what crashed the economy in 2008. People talking about the housing market, that's absolutely true. That was a huge part of the collapse. But the real problem was the gambling on the housing market. And that was done through derivatives. So the banks would say, okay, now you've got all this mortgages here that have been packaged together. Now I'll make a bet that's 100 times the size of that against someone else based on that package. And those were derivatives, to put it simply. And when those blew up, it wasn't just that the housing market and the value here blew up. It was a bet 100 times that size that blew up. And that's what caused a cascade of problems. And here the bankers are saying, please let us do it again. But it gets worse. Okay, so let's go to the Huffington Post for an explanation. Wall Street lobbyists are trying to secure taxpayer backing for many derivatives trades as part of the budget talks to avert a government shutdown. Now, the reason this is a good opportunity is you can't have a government shutdown. Both parties realize how deeply unpopular they are and how that would anger the American people even more. So they've got to pass the bill. So if they could find a way to sneak it into the bill, boom, it's done, okay? But the operative word there, the most important was taxpayer-backed. Okay, so we'll get to that in a second. First, Huffington Post explains, the bank perks are not a traditional budget item. In other words, they have no business in this bill. Okay, the only reason they could put it in the bill is because they're enormously powerful. They're enormously powerful because they paid off not just Republicans, but a tremendous number of Democrats as well. Last time around on similar legislation, they got 70 Democrats in the House to vote with them. Okay, so they're good at bribing both sides. So now they explain the heart of what this would do. They would allow financial institutions to trade certain financial derivatives from subsidiaries that are insured by the Federal Deposit Insurance Corporation, potentially putting taxpayers on the hook for losses caused by risky contracts. So the FDIC protects your money in the bank. So if you put money in the bank, you don't have to panic, because even if the bank loses it, the government, through the FDIC, will cover it up to a certain amount. Now, what the banks are saying is, we used to be allowed to gamble with that money that you put in, backed up by the taxpayers. Because of Dodd-Frank, we're not allowed to gamble with that anymore. One of the few things that Dodd-Frank did well in reforming what Wall Street is doing. They're like, we'd like to remove that safeguard and gamble with your money again. Now, think about it. If you go to Vegas and somebody says, all right, you have to gamble with $100 of your own money. Are you going to be careful? Well, maybe, depends on how much you drank. But you care a lot because it's $100 of your money. If on the other hand, somebody said to you, I'm going to give you $100 of someone else's money, and don't worry, it's backed up by someone else entirely, okay? It's not your money at all. And you keep all the winnings. But if there's losses, you don't pay any of the losses. What would you do with that $100? You would bet it all. And in fact, you would bet it on the riskiest thing because it would have the greatest return. Because if you bet it on a 100-to-1 bet, who cares if you lose it? It's not your money, right? But if you win a lot more. So what the banks are saying is, let us gamble with the deposits you put in the bank, backed up by taxpayers, and if we lose, that's on you. If we win, that's on us. This is the trick they did last time, and they took home billions of dollars in pay. They crashed the economy, we saved it as taxpayers, and they walked away laughing at us. And they'd like to do it again. And right now, that's exactly what they're in the middle of doing. If you don't get money out of politics, this gravy train is going to continue for the rest of time. Wolf-pack.com. Stop the legalized bribery. Otherwise, one of many consequences is that another financial collapse is inevitable, and yes, we'll be on the hook again. wolf-pack.com. Do something about it.